Hi, this is Lance Edwards, and I'll welcome you to this session of Apartment Wealth Nuggets. And in this session, we're going to talk about analyzing deals, the math behind it. And this is covered in my book, How to Make Big Money in Small Apartments. Starting on page 71, goes into detail, the explanation of what I'm about to discuss here with examples. So you can also check it out in the book, How to Make Big Money in Small Apartments. But the one thing, the one variable or ratio we look at in apartment buildings, and frankly all income producing real estate, all commercial income producing real estate, is something called the cap rate or the capitalization rate. And the cap rate formula is very simple. It's simply this: cap rate equals NOI divided by price. And it's measured in percent per year. So the NOI actually stands for the net operating income. And net operating income is the revenue minus the expenses on the apartment building. Revenue comes from the rents, primarily rent, but you can have other income such as laundry income, late fees, application fees, parking fees. Expenses is all the expenses needed to operate the building: taxes, maintenance, your management fees. Expenses includes all those fees, with the exception it does not include the mortgage payments or the debt services. That comes later. So these are your two formulas. And by the way, if you understand these two formulas, congratulations, you've passed the math portion of the business, because that's it. Everything that we do in evaluating properties and making offers on properties is based on these two formulas, which is one of the many reasons I chose to get started in apartments, is because it's all very simple math. I don't need to see the building, I just need to see the math. But back to cap rate. So these are the formulas. Let's give you an example. Let's say the net operating income on a building is $100,000 per year. And the price of the building is $1 million. So $100,000 per year divided by $1 million means our cap rate is 10%. You'd be called a 10 cap deal. What that's telling us is that if we were to pay all cash of $1 million, we would get a 10% return on investment from income over and over and over. And in apartments, the higher the cap, the better, because that means the higher the return on investment we're getting for our particular price. And that is how we evaluate side-by-side comparison on apartments across the country. Is how here in my office we can evaluate properties all over the country without seeing them. It's how we make offers all over the country without seeing them as well, because it's all based upon simple math. Now, if you'd like even more detail, some more examples on cap rate and the other ratios, very simple ratios and looking at apartment deals, I'll encourage you to go check out my book, How to Make Big Money in Small Apartments, and take note of this. You start looking on page 71, it goes in full detail. Until our next session, go check it out. Go find yourself some apartment deals. Take care.